So, if you've got a Medigap plan, you've probably noticed something about your monthly premium. It has a tendency to go up. It can be really confusing and, yeah, a little frustrating to see that number creep up year after year. But understanding why it happens, that's the first step to getting a handle on it. Okay, let's get into it.
Picture this. You open your mail, and there it is, a letter from your insurance company telling you your premium is going up. It's a moment that millions of Medigap policyholders have every single year. But the good news is, you're not stuck. You've got options. First, though, we need to peel back the layers and understand the why behind that increase.
Believe it or not, the story behind your rate increase actually starts on the very first day you bought your policy. It all boils down to how the insurance company decided to price your plan right from the get-go. See, insurers use one of three main ways to price these policies. They call them attained age, issue age, and community rated. Each one is a little different, and the method they used for your policy has a huge impact on how your premium is going to change over the years. Okay, first up is the most common one you'll see, attained age. It's really simple. Your premium is tied to your current age. So let's say a woman named Gloria buys a Plan G for $120 a month when she's 65. Well, when her 66th birthday rolls around, that premium might bump up to $125 just because she's a year older. These plans often start out cheaper, but you can bet they're going to go up as you age. Next, you have what are called issue-age-rated policies. With these, the premium is based on the age you were when you bought the plan. Sounds pretty good, right? Your rate won't automatically go up just because you have another birthday. But, and this is a really big but, it can and will still go up for other reasons, and we're going to cover those in just a minute. And finally, there's community rated. This one's pretty easy to understand. Basically, everyone in a certain area with the same plan pays the exact same premium. Doesn't matter if you're 65 or 85. Now, this seems like the most stable option, but here's the catch. The starting premiums are usually quite a bit higher than the other two. So, no matter which pricing model your plan uses, you're probably wondering if there's a magic bullet, a plan that's immune to these increases. Well, the short answer is nope. Let's dig into why every single Medigap policy out there is going to see rate hikes over time. And hey, don't just take my word for it. The experts who live and breathe this stuff, like the team over at Boomer Benefits, they make it crystal clear. Rate increases are just a normal, expected part of having a Medigap plan. So the goal isn't to avoid them forever, because you can't. The goal is to understand them and manage them. So the first reason is one we've already hit on, your age. If you have an attained age policy, and remember, most people do, you should just expect a little bump in your premium every year around your birthday. It's just baked right into the way that plan is designed. The second reason is the big one, and it hits everybody, no matter what kind of plan you have: economics. Think about it, the cost of medical care is always going up. In fact, health spending jumped by 7.5% from 2022 to 2023 alone. So as doctor visits and hospital stays get more expensive for the insurance company to pay for, they have to pass those costs on to everyone. This is the runaway train that impacts every Medigap plan. Okay, so now that we know why this happens, what can you actually do about it? Well, for most people who are new to Medicare these days, the choice really comes down to two super popular plans, Plan G and Plan N. So let's put them head to head. Now, what's really fascinating when you look at these two plans side by side is just how similar they are. I mean, they both cover all the big ticket items, like your hospital costs under Part A and that 20% that Medicare Part B doesn't cover. The real differences are in the tiny details of your out-of-pocket costs. This is really the heart of the decision right here. It's a trade-off. With Plan G, you'll pay a higher premium each month, but after you've paid your annual Part B deductible, you are done. No more copays for anything Medicare covers. Plan N, on the other hand, gives you a lower monthly premium, but you'll have some small copays for doctor visits and ER trips. It's all about predictable costs versus a lower monthly bill. Now, there is one other little thing you should know about Plan N. It's something called a Part B excess charge. This can happen if your doctor doesn't accept Medicare's approved payment in full, and they're allowed to charge you up to 15% more. But let me be really clear, this is super, super rare. The vast majority of doctors in the US accept Medicare assignment, so for most people, this is a total non-issue. So what if you have a plan? The rates keep climbing, and you're wondering, am I just stuck? Well, in some states, there's this amazing opportunity called the birthday rule that can be a real game changer. The birthday rule is exactly what it sounds like. It's a rule in certain states that gives you a special window every year, right around your birthday, to switch Medigap plans. And here's the best part. The insurance company is not allowed to ask you any health questions or use your health history to deny you. It is such a powerful tool if you have it. But you absolutely have to know the ground rules. First, and this is the most important part, this is a state rule, not a federal one, so it doesn't exist everywhere. Second, you can usually only switch to a plan with the same or fewer benefits. So for example, you couldn't jump from a Plan N up to a Plan G. And third, the timing is critical. In a state like California, you get 60 days after your birthday to make a move. You've got to know the specific rules for your state. All right, let's bring all this home and talk strategy. Because managing your Medigap premium isn't something you do just once. It's really an annual checkup that can save you a whole lot of money over the long haul. So here's your simple 3-step game plan. First, when you get that rate increase notice in the mail, don't just sigh and file it away. Let that be your trigger. Step 2, take literally 10 minutes and compare rates for the exact same plan with other companies. Or hey, maybe compare a Plan N if you currently have a G. Remember, a Plan G from one company is identical to a Plan G from another. And finally, step 3, check if your state has a birthday rule or some other window that lets you switch easily. And all this really leaves you with one final question you should ask yourself every single year. Premiums go up, company rates change, new, more competitive carriers enter the market. Taking just a few moments each year to review your plan, make sure that the coverage you have isn't just a good plan, it's still the absolute best value for you.